Hi, welcome to our video on how to generate more than 100,000 per annum passive cash flow in less than 10 years, and with only 22,000 outlaid and with very minimal risk. Sound too good to be true? Well, let's move on and look. Today you're being presented to by Catherine Smith, myself. I have a number of degrees including in accounting, taxation, financial planning, mortgage broking, real estate, to name a few. But more importantly, I'm a passionate property investor and have been for over 20 years, having bought and sold more than 20 properties so far across all states of Australia. As usual, everything has to have a disclaimer. This is not meant to give any accounting, legal or taxation advice, and no personal advice either. You should seek your own. So the sad fact is that whether you end up as part of the struggling majority or the wealthy minority depends on what you do or don't do right now. Unfortunately, Australians are retiring in pretty poor shape. The statistics come out every year and they all paint the same picture. 76% of Australians are retiring on less than 20,000 per annum. Just want you to stop and cast your mind to whether you could actually live on 20,000 per annum. It's basically the borderline poverty level. 21% of Australians are retiring between 21,000 and 50,000. That's a bit better, but once again, it's not a flash lifestyle. Perhaps maybe you get to eat out one night a week, perhaps get to go on a holiday once a year. Most people I speak to envisage a retirement where they will be on 50,000 or more per annum. But the reality is less than 3% of Australians end up that way, unless you do something about it. So what I'm here to talk to you about today is buying cash flow positive properties. I actually have another video altogether on this topic, but I'm just going to give you a very simple example of how you can change your future, your retirement, your cash flow, your income, your wealth by using the power of compounding and reinvesting. So let's say you buy a positive cash flow property, which you can actually do. It's quite easy to do at the moment. It's seriously, is $100 a week, $100, $150 a week in your pocket going to solve all your financial woes? Hardly likely. But let's look at what happens if you use the power of compounding. According to Albert Einstein, compounding is mankind's greatest invention because it allows for reliable, systemic accumulation of wealth. Let's see how it works. Let's say you take that $100, $150 a week cash flow and reinvest it. Save it until you've got a deposit for another positive cash flow property. I do this myself, and I simply have it going into another bank account that I basically forget about. I don't access it, I don't look at it, except for every few months to see where it's at and whether I'm ready for my next property. Your cash flow after you've bought the next property is now $200 to $300 a week. Certainly still not enough to save all of your financial troubles, but you save that now until you've got a deposit for yet another property. And so on. So now having a look at an actual example. The first property you buy, $22,000 deposit, now you have $7,800 per year coming in. You save that for the next property until you have, in this example, in 3 years, deposit for another property. Now you have two sets of $7,800 coming in, or $15,600. These are a particular type of property that I can show you how they work, but basically you end up getting a what we call a back-end bonus at this stage as the property transfers to the renter that is renting it off you. Now you're able to buy another property and you have 7,800 times 3 coming in for you. In that third year, as you can see, it's now all about compounding. Now you have the ability to buy another property each year. Can't fit the whole spreadsheet on here, but I extrapolate this out to 2021, where now you have 11 properties in your portfolio. By 2022, 14 properties in your portfolio. So in less than 10 years, you're now earning an income greater than $100,000. You also have a large amount of capital deposit saved up, which you could use to pay down your own debt, put into superannuation, or buy more properties. It's a very simple example and I can show you exactly how it works in a private consultation. I also have another video where if you're able to buy more in the first year, can absolutely maximise this return very, very quickly. So as I said, in that example, you're generating over $100,000 cash flow and have a spare $169,000 for more properties or to pay off your own home loan. Sounds good? But why do I say minimal risk? Surely there's risk. Does it sound too good to be true? I'm a financial advisor in many capacities, and I've always said to my clients, if it sounds too good to be true, it probably is. But this is actually not one of those cases, and this is something I personally do for myself. So why do I say minimal risk? Firstly, there's a very small capital outlay. $22,000 is not going to make or break the end of the world for you. However, if you are buying a very expensive property, you might be outlaying $80,000 to $100,000. So a small capital outlay, very small amount to lose. You're buying low value properties. That may sound a bad thing, but it's actually a good thing because there's less risk of a major price correction. When the GFC hit and properties did drop in value in some areas, it was particularly the very high-end properties, saying $1 million properties in Sydney and on the beachfront, that dropped. The actual stable country regional towns in New South Wales, it stayed very, very stable. They didn't have much of a price fluctuation at all. In fact, in most areas, they just continued to grow in value. As I said, there's a different type of property investment, the one I'm talking about here, where basically the profit is locked in via a buy-sell agreement. You're basically on-selling the property the day you buy it, so there is no risk of a price correction anyway because you've already on-sold it at a profit. There's also a very high demand from tenants for these type of properties. No shortage at all. So the example is a very specific type of property that I can tell you more about. But there's many other types of investing, all of which I can help you with. But the only sure thing that is if you do nothing, you've got nothing to lose, but also nothing to gain. So whatever you do, just get going. Because there are only two mistakes one can make along the road to the truth: not going all the way or not starting. So know where you're going. There's no hope of success for the person who does not have a central goal, a central purpose or a definite goal. So what do you do in a property investment journey? Firstly, I believe you need to set up the structure. To me, it's like a foundation. Too many people rush out and buy properties without actually thinking about their long-term goals. And too many property spruikers will sell you a property and tell you it's the best for you without actually considering your structure. So it's the most important part of every business or property is getting the foundation right in the first place. Research your options, get advice, get it right before you even begin, because those who fail to plan to fail. As I said, set up the structure, prepare a plan, then we talk about what sort of finance you need before you even start looking for finding a property. So having said all that, we offer a service called a property portfolio review that actually shows you how many properties you can buy, how much you can borrow. How much will it cost you per week is often the crucial decision. How you should structure the purchase for tax purposes, your own name, someone else's name, company, trust, super. It's only $385, which includes the hour consultation and discussion about your plans. If you're interested in that, you can email me, Catherine@wfscanberra.com.au. We also have a free report about how to build a property portfolio. It reveals the 7 elements to building a successful property portfolio. You can also get that on our website at wfscanberra.com.au. So what do the wealthy say? Richard Branson says now is the time to make your millions. Fortunes are made out of recessions. A lot of entrepreneurs get going in the economic depths because the barriers to entry are lower. Warren Buffett says be fearful when others are greedy and be greedy when others are fearful. And most certainly now, fear is widespread. Luck is what happens when preparation meets opportunity. I've shown you an opportunity here that anyone can do. But you do need to take preparation. So good luck. More from the world's bestseller Stephen Covey, The 7 Habits of Highly Effective People. Habit number 1 out of all the 7 habits is be proactive. Through compound interest, leverage, which is using other people's money, and government support, you have the option to create wealth for yourself and your family. But the next step is up to you. There are two choices: commit, continue to pay tax and do nothing; save tax, build wealth, and you can retire with comfort and dignity. We have other videos in this series, such as property versus shares, which is best, very controversial; why property, how to grow a portfolio; general property investment strategies; land tax and properties, finance strategies, tax and rental properties, tax and property development, ownership structures, positive and negative gearing, and how to build a portfolio with passive cash flow of $50,000 per year with only $20,000. If you'd like to know more about wealth coaching, what is wealth coaching? We have wealth breakthrough packages, holistic wealth through property packages, holistic wealth through business packages. Simply contact myself for further information, Catherine@wfscanberra.com.au. Thank you for listening today. Our favourite saying at Holistic Financial Solutions is life is a challenge, meet it. Life is love, share it. Life is a dream, realise it. And life is a game, play it. So have a good day and hope to see you again watching our next video series.